All right, today we're going to talk about something really powerful for retirees. It's a strategy called a qualified charitable distribution, or QCD for short. Basically, it's a way you can give to your favorite causes and get a fantastic tax break at the same time. Let's get right into it.
So, if you're in retirement, you probably know all about required minimum distributions, RMDs, right? It's that money the IRS says you have to take out of your retirement accounts every year. And of course, that usually means a bigger tax bill. But what if there was a way to handle that requirement, support a cause you really care about, and pay absolutely zero taxes on that money? Well, you're in luck, because there is. And here it is, the qualified charitable distribution. The easiest way to think about it is like a direct pipeline from your IRA straight to a charity. The big rule here is that you've got to be at least 70 and a half years old to use this amazing tool. This isn't just writing a check. It's a very specific and very tax-smart way to handle your giving. And we're not talking about small change here. For 2025, you can donate up to a whopping $108,000 per person per year using a QCD. And that number is tied to inflation, so it'll likely keep going up. Think about that. For a married couple, that's more than $200,000 you can move out of your IRA and into the hands of a charity, completely tax-free. Okay, so how does this actually work in practice? Honestly, it's pretty straightforward. First, you've hit that magic age of 70 and a half. Then you just call up your IRA custodian, the company managing your account, and tell them to send money directly to a qualified charity. Here's the most important part. The money never touches your bank account. And because you never officially receive it, that transfer can count toward your RMD for the year without showing up as taxable income for you. And the benefits? Oh, they are huge. I like to call it the triple tax win. First, the donation is totally excluded from your taxable income. Gone. Second, it satisfies some or maybe even all of your RMD for the year. And third, and this is a big one, by lowering your income or your AGI, it can actually help you steer clear of those annoying extra charges on your Medicare premiums and even lower the taxes you might owe on your Social Security benefits. It's just a fantastic financial move all around. Let's put some real numbers on this to make it super clear. Let's say your RMD for the year is $20,000. Normally, you'd add that whole $20,000 to your income and pay taxes on it. But if you use a QCD to send $10,000 straight to a charity, you've now taken care of half of your RMD. And the best part? You only have to report the other $10,000 as income. Just like that, you've supported a great cause and cut your taxable distribution in half. So you're probably asking, is this the right move for me? Well, it's perfect if you're over 70 and a half, you're dealing with RMDs, and you already like to give to charity, especially if you take the standard deduction instead of itemizing. On the other hand, it might not be the best fit if you're younger, or if your money is in a Roth IRA where your withdrawals are already tax-free. And of course, if you really need that RMD money for your own living expenses, then you'd want to hold on to it. Now, a QCD isn't the only game in town for tax-smart giving. Let's quickly look at another popular one, the charitable gift annuity, or CGA. This one's different. With a CGA, you give a donation to a charity, and in return, they literally sign a contract to pay you a fixed income for the rest of your life. After you pass away, the charity gets to keep whatever's left of your gift. So let's put these two side by side. It really boils down to your goals. A QCD has to come from an IRA. It directly lowers your taxable income, and it helps with your RMDs. You don't get any income back from it. A CGA, on the other hand, can be funded with all sorts of things, like cash or stocks. You get a partial tax deduction up front, and it gives you that income for life. The main trade-off is that a CGA is a done deal. It's irrevocable, and it doesn't help with your RMD. So a QCD is really about lowering your taxes today, while a CGA is more about getting lifetime income while planning a future gift. Okay, if you decide a QCD is right for you, you got to make sure you do it right. Here are a few tips to avoid any snags. First, always confirm the charity is a qualified 501c3. Don't procrastinate. Get your request in early in the year, not on December 30th. And make sure you get and keep that written acknowledgement from the charity for your tax records. And one last pro tip. What matters for the deadline is the date the check is issued by your IRA custodian, not the date the charity actually cashes it. That one trips people up. When you boil it all down, this quote really says it all. For retirees who are generous and also want to be smart about their taxes, the QCD is just one of the most efficient tools in the entire toolbox. It's a direct, powerful way to make your charitable giving work that much harder for you. Look, figuring out how tools like QCDs fit into your bigger financial picture is so important. If you've got questions about retirement planning and how you can make strategies like this work for you, we can help.
At The Annuity Expert, our services are always free. Just give us a call at 770-755-1565 or check us out online at annuityexpertadvice.com. So, I'll leave you with this to think about. How could a truly tax-free gift change things for you? Not just for your own retirement plan, but for the organizations and causes you care about most. It's a pretty powerful idea to explore. Thanks so much for tuning in.